NVIDIA right now is trading, get this, at only 25 times forward earnings. For all of its multi-trillion-dollar valuations, 25 times like a consumer staples company. This is back to prior trough levels, in fact, where the stock has historically rebounded. And that's exactly what my next guest sees happening from here. Vivek Arya is back. He's the senior semi-analyst at BofA. And Vivek, 25 times, I mean, all you really need to know with this company is how strong the earnings power can possibly be in the coming years. Is 25 times warranted if they say, look, the strongest gains are behind us and it's going to settle out now?
Sure. Hi, Kelly. I think there are a few debates that are happening right now. First is how sustainable is this spending on AI? And secondly, even with this pace of spending, will there be any shifts from a competitive perspective between NVIDIA and the other solutions out there, whether it is Google's TPU, whether it is AMD's GPU, and so forth? I think the first thing on the spending, there will always be question marks about the spend ahead, but we fundamentally believe that we are essentially taking the computing industry from the era of trains to the era of rockets. That's the big transformation that is happening in this move towards accelerated computing. And we think we are still in the early stages of that. Every year at this point, there is a debate about how much the spending will be. People modeled 20 or 30% growth. And the last few years, that spending has been upgraded to 50 to 60% growth. Why? Because this is mission critical for these hyperscalers. So I think the pace of spending will continue to be very strong. Now, when it comes to the competition, I think it's important to realize that there's a lot of constraints from a supply perspective. And part of NVIDIA's investments, we think, have gone into aligning the supply chain with them. It's number two, to make sure that their product is extremely flexible and versatile. So whoever is investing money in these AI factories is able to maximize the output from these AI factories. And given all that, we think the valuation at 25 times, which is essentially 0.6 or 0.7 times their earnings growth rate, is still too cheap for a company that can grow its sales and earnings at a 40 to 50% compounded pace.
Right. So you remain bullish, which is the fundamental point here. I appreciate you explaining why. Broadcom and Google have something in common, and you're quite positive, I believe, about this. What are TPUs, and how does that play into the next phase of what kind of this back and forth over powering AI?
Sure. So when we are looking at AI accelerators, the majority of the market, 75 to 85% of the market, is built around NVIDIA's merchant accelerators, right? These are the GPUs. These are extremely flexible. One can find them in every cloud, whether it's Amazon Web Services. Even Google's cloud, by the way, uses a majority of NVIDIA GPUs, or you can go on Microsoft Azure. There's on-premise deployments. There are sovereign deployments. So the point is that these are very versatile, very flexible. But Google has built a very capable product called the TPU that they have really only used mostly for their own internal applications, search, YouTube. But now there is a thinking that maybe they can start to rent it for other customers, for example, a Meta. But I want to make a point that this isn't the first time, we are hearing about the TPU. The TPU actually business started in 2016. At that time, NVIDIA's data center revenue was less than 400 million. Now, in this decade since the TPU has been out, NVIDIA's data center sales have gone up by a factor of 500, right? So just keep that in mind, that just because a TPU is there doesn't mean that NVIDIA's business model is under a major threat. Yes, there is more competition, but we think there's a rising tide. The spending is going up by a factor of 2 to 3 times. And of course, there are going to be competitors on the way. But what's important to understand is that NVIDIA's product does offer the most flexibility and versatility in every situation of deployment, not just for internal workloads.
Right, but you are bullish on Broadcom for that reason.
But I'm going back at it again with you, Tony. And that's this idea of circular AI spending. So whether it is the news today with NVIDIA and Synopsys, or even, and I realize private companies, but OpenAI apparently taking a financial stake in Thrive Holdings, which is a subsidiary of Thrive Capital, which is one of the biggest venture investors in OpenAI. How to game this out and parse this out as it continues?
Yeah, so I think that, what really matters is that the end demand is there. And so to me, there's probably two things. One is that token economics are making more sense. They're more profitable, and that the inferencing cost is going to be, going down, and then the payout from each token usage is going up. And so to me, that perpetuates more of a virtuous flywheel So I think one is end demand, and then number two is probably this training. On the training aspect, is this race to AGI? Like, is that accelerating? Like, as long as that's on, I think that the market will continue to fund it. So those are probably the two things that I think the market's looking for to assess this.
Like big tech in the AI trade, that's probably going to be up anywhere from 20 to 25%. But I think it's really the AI revolution stocks. What I view as sort of the winners, up 20% in a minimum. Look, it's my view. This is just starting the next stage of the AI revolution. I mean, all of our checks are showing, even in the last 3-4 weeks, about 20, 25% of deals are actually accelerated from the hyperscalers. So that's why I view it from software to cybersecurity, the infrastructure. I continue to view it as, this is just the beginning of the monetization of the AI revolution.
What do you make of these deals, though, excuse me, that NVIDIA has been making in terms of investing in a partner, which is basically a customer? Because in this case, the deal is that Synopsys will use CUDA, and so we'll become a paying customer. So they're investing $2 billion in stock in order to gain this customer. At some point, do you question that, or is that all fine?
Look, I mean, as someone like myself that covered tech, late 90s vendor financing, so obviously, worries, is that a red flag? Look, I view it as this is an AI arms race in terms of everything that's playing out. So for NVIDIA, for OpenAI, for what we see AMD and others, like they're putting stakes in the ground. I view it as for every dollar they spend, they're getting back $8 to $10. Now, in the near term, there could be questions until it plays out. But I think we're going to look out 2, 3, 4 years at these deals. And that's how, like NVIDIA, they're going to continue to be like, that's the one chip in the world that's fueling the AI revolution. And I don't see that slowing down. That's why I love everything Jensen's doing.
Were you surprised? I was. I'm curious that Synopsys didn't trade better today, understanding that stock went from 650 to 420 in a straight line. That announcement today, $80 billion company, $2 billion investment. I would have traded well. I thought it would traded a lot better than it did today.
Yeah, look, I think, if you look at Oracle, the $100 dip ever since OpenAI, the view almost like good is bad. Like being associated in NVIDIA, OpenAI, is that like a too big to fail moment? But I think we're going to look out, like, I'm surprised the stock didn't trade higher. I think there's something where I view that as more of an opportunity. Given my view, like that's one of those sort of second, third derivatives of this AI revolution trade into 26.
Now let's talk about the force of light, NVIDIA. Something's been nagging NVIDIA ever since the stock touched $212 at the end of October. Despite the company's unassailable long-term record, the what have you done for me lately crowd has turned on this stock. Hitting and booing it early this morning, even as flirted with $172. Now, I could regale you with the slings and arrows aimed at NVIDIA stock, but let's just deal with the current imbroglio. NVIDIA was thought to have almost the entire AI semiconductor market to itself not that long ago. But lately, we've seen NVIDIA become a punching bag. First, AMD unveiled a competitive chip, one that was adopted by OpenAI not long after NVIDIA said it would invest billions in that company and received a gigantic order for semiconductors itself. Then Google announced it was going to expand the production of its own chips, which had always been presumed to be in some sort of in-house afterthought, until it showed the world how terrific they were. Then they leapfrogged into an order from mega NVIDIA client Meta to Google. To even think that Meta would team up with arch rival Google on anything would be difficult to imagine, but to pay Google rather than NVIDIA in order to bring costs down? It's a travesty. And don't forget, then there's Gemini 3, another reason to be able to want something that Google has. All on top of that, our government's saying that China remains a no-fly zone for NVIDIA's best chips, even though I'd argue that in our national interest to get China addicted to NVIDIA's semiconductors. But they call me a globalist. Next thing you know, monopoly with gigantic Chinese profits looks more like it's a China-less, unhappy oligopolist, which means the end of NVIDIA's big profit margins and the beginning of its lion and winter scenario. Since then, the stock's been just a complete nightmare. Sometimes I feel like they should change the symbol from NVDA to DNR, meaning do not resuscitate. Until today. Today, when NVIDIA announced an expanded partnership with Synopsys, a company that helps to automate the process of chip development, Synopsys received $2 billion from NVIDIA as an investment to cement the relationship. Take a listen to what CEO Jensen Huang told us this morning on Squawk on the Street.
This is a huge deal. The partnership we're announcing today is about revolutionizing one of the most compute-intensive industries in the world, design and engineering.
Jensen on offense. Now, this partnership marries NVIDIA's lightning-fast chips with the tools of Synopsys to create simulations at speed and scale that Jensen said was previously unimaginable. The hope here is that anything involved in the manufacturing of any large product can be automated, revolutionizing the way things are built. Do you know what this means? It means attacking a $40 trillion construction industry and making it much easier, simpler, less wasteful, and of course cheaper to build any large project, from gigantic bulk carriers to aircraft carriers. For example, let's say, this is just an example. Boeing spent $15 billion developing the 787 Dreamliner, which translates to around $25 billion in today's market. Gotta believe a big chunk of that went to prototyping, something that this technology could allow them to do digitally for much less money. It's more likely that new and old companies would begin to build manufacturing plants that are much less expensive and therefore increase the rate of success. It could be just a productivity enhancer maybe we've never seen. This announcement did two things. One, it tells you that there's going to be a replacement cycle of immense proportions since everything's built around much slower CPUs versus NVIDIA's GPUs. And two, that whatever you might think of that hyperscaler horse race to build out chatbots that we all know, that may not be as important now that this announcement has come out. Or to put it another way, there's certainly a lot riding on Google's chips and what they might mean to NVIDIA, as well as any possible slowdown in OpenAI's growth. If Google's Gemini 3 picks up steam and OpenAI, a closer affiliate to NVIDIA, falters, it could be nasty. However, in the end, that's a business-to-consumer strategy. And the stock market has historically found business-to-consumer fickle, hard to game, not worth as much. But NVIDIA's work with Synopsys, while almost invisible to you, the consumer, has much more potential to actually make a lot of money. Wall Street, you see, loves business to business. This is business to business. Will this Synopsys deal stem the selling in NVIDIA stock? Oh, it's hard to tell, given that we could get a data point tomorrow. It's so critical of the big data center build out that it takes everything down. Still, though, this deal matters. It wasn't for show. It was for substance, business to business, and it turned at least that stock around today. The bottom line, I never like to say, well, it's anybody's guess. I would say, however, that it seems like the speculators are going to have their hands full with Humpty Bitcoin. But the NVIDIA backers just got a second win that could be meaningful for more than just one day's action.
All right, I hope you're all doing great today. I'm going to talk about NVIDIA in a moment, but first I want to address two things. One that has to do with the broader market and the other has to do with IREN. Today, after market close, IREN announced a convertible senior notes offering with two batches of notes, $1 billion worth of 2032 notes and another $1 billion of 2033 notes. IREN will also give initial purchasers of the notes the option to purchase an additional $150 million of the 2032 notes and an additional $150 million of the 2033 notes. And so altogether, not counting fees and other costs, IREN is looking to raise about $2 billion, possibly up to $2.3 billion by issuing convertible debt. IREN reserves the right to pay converting note holders with cash, shares, or a mix of both at IREN's discretion. In addition to the notes offering, IREN also intends to issue new shares in a separate direct offering in order to repurchase older convertible notes and extinguish those older notes so that they are no longer convertible into shares. IREN is also entering into capped call transactions, which is similar to what they did in their last convertible senior notes offering. The capped calls help to reduce the risk of dilution. Pricing details will be announced later. Overall, this does not concern me, and I continue to be bullish on IREN for at least the next 1 to 2 years. The capital raised from this offering will help IREN speed up their AI build-out. We know IREN is seeing very strong compute demand, including from companies like Microsoft, and now they need to execute and fulfill that demand. This capital will help them do that faster. I don't view this offering as a deal breaker at all, and I continue to be bullish on IREN for at least the next 1 to 2 years. Now, really quick, let me address something that's important to the broader market, and then I want to talk about NVIDIA after that. Much of the market was in the red early in today's trading session after the Japanese 10-year yield surged notably higher. I'm bringing this to your attention as a heads up. You may remember that the last 2 times the Bank of Japan raised interest rates, U.S. stocks reacted negatively shortly thereafter, both in August of 2024 and then again in early 2025. Why am I mentioning this now? Because many market participants expect the Bank of Japan to raise interest rates again at their next meeting on December 19th. Some are calling for the BOJ to wait until January to raise rates, but we'll see what happens. I'm not going to get into all the details of the yen carry trade or Japan's debt situation right now, because that would take an entire video to explain. The very simplified short version version is that Japanese interest rates have been very low for a very long time, and that resulted in many large firms borrowing large amounts of money from Japan and then using that money to purchase U.S. assets, including U.S. stocks. And so if the Bank of Japan raises rates and the yen rises, some of those U.S. assets will have to be sold. Again, that is a very surface level and simplified explanation due to a lack of time, but that's essentially what's happening. Be prepared for some potential volatility this month ahead of the BOJ meeting on December 19th, and also after the meeting if they raise interest rates, because that would likely have an effect on U.S. stocks. Now, let's talk about NVIDIA. Today, NVIDIA announced an expanded partnership with Synopsys, as well as a $2 billion investment in the company. The deal entails a multi-year collaboration spanning NVIDIA CUDA, accelerated computing, agentic and physical AI, and Omniverse digital twins, opening new market opportunities across engineering. The companies will also collaborate in engineering and marketing activities to further adoption of GPU accelerated engineering solutions. This collaboration will enable R&D teams to design, simulate, and verify intelligent products with greater precision, speed, and at a lower cost. This partnership is a big deal. I've been pounding the table in recent months about NVIDIA's physical AI business because I genuinely don't think it's getting enough attention right now. And I'll talk more about that in a moment. Really quick, I want to remind you that NVIDIA is set to present at the UBS Global Technology and AI Conference this Tuesday, December 2nd at 6:35 a.m. Pacific, 9:35 a.m. Eastern. This event will likely have an impact on how NVIDIA trades in the short term, given that this event is geared toward the financial community. I expect the topic of GPU depreciation and useful life to be brought up given all the recent talk from well-known short sellers. As a reminder, I disagree with the premise that the hyperscalers are understating GPU depreciation in order to artificially boost earnings. Rather, I think the hyperscalers have simply come to the realization that the useful life of the hardware is longer than what they originally anticipated, due mainly to two factors: NVIDIA's continuous improvements of older generation hardware through software, and second, the world is severely compute constrained in the face of very strong AI demand. Since the world is compute constrained, developers will use whatever compute they can get their hands on, including hardware that under normal circumstances would be considered older generation. This extends the useful life of the hardware. There's a reason why NVIDIA, 100 GPUs from 6 years ago, are still running at full utilization today. There's a reason why CoreWeave is able to rent out H100 capacity at 95% of the original rental price. The world is compute constrained, and there is simply not enough supply to meet the demand. That is fundamentally opposite of a bubble. A bubble is characterized by a surplus of supply and a shortage of demand. Today, we're seeing the complete opposite. Today, there's a shortage of supply in the face of very strong demand. At the peak of the dot-com bubble, most of the fiber that had been laid was dark. Today, there are no dark GPUs. Every GPU is spoken for as the world simply cannot get enough compute to meet the demand, and that will likely continue for at least a few years. As I've said for many months now, I'm expecting a surge in compute demand fueled by agentic AI that extends well into 2026. Jensen appears to agree with this given his recent commentary about agentic AI. And then after that, I think the next major surge in compute demand will be fueled by physical AI. And physical AI is where the NVIDIA Synopsys partnership comes into focus. Today, most analysts are hyper-focused on NVIDIA's data center business, and I don't think they are adequately factoring in growth from some of NVIDIA's other business segments into their long-term NVIDIA estimates. NVIDIA's CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. Additionally, I think we will see many new use cases emerge as a result of physical AI, and that should increase the need for compute even further. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it. And I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day. And I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free and you can always change your mind. Thanks for watching and hopefully I'll see you in the next video.